Hello and welcome to Market Week in Review for the week ending February 25th, 2022. I'm Greg Coffey, and today I'm joined by Client Portfolio Manager Stephen Doran. How are you, Stephen? It's good to see you.
Hi, Greg. Very good. Nice to speak to you.
Well, it's been a week filled with market volatility as geopolitical risks centered around Russia and Ukraine were at the forefront of investors' mind. The ongoing invasion of Ukraine represents a humanitarian crisis that will undoubtedly impact millions of people, and our thoughts go out to all of those affected. Stephen, from an investment perspective, could you highlight what has transpired across financial markets this week?
It's been a pretty seismic 36 hours, and at some points yesterday, the outlook for markets and economies looked very bleak. As we know, markets hate uncertainty, and that's what they were faced with in spades. As you'd expect in that kind of environment, equities sold off. US markets opened down around 2%, whilst European markets were already down around 4%. Commodity prices rose as a barrel of oil pushed above $100 a barrel, and government bonds rallied. However, markets recovered strongly from those opening lows, with the S&P 500 and Nasdaq recovering by 4 and 7% respectively to finish the day in positive territory. At the time of recording on Friday morning, that has continued into today's sessions. Interestingly, the MSCI World is at the similar point to where it was in January, when the focus was very much on the hawkish pivot of central banks. So for all the noise and fear that we've seen in markets, they aren't at a materially different level to where they were around a month ago.
So, Stephen, what do you think the implications are for central banks and monetary policy moving forward as they try to balance inflationary levels and the impact of the Russian invasion of Ukraine?
Obviously, commodity prices or price moves create a headache for central banks. And it's not just within oil and gas. Russia and Ukraine are major producers of wheat. Any further price rises will add fuel to the inflationary pressures within the economy, while simultaneously hurting economic growth. Yesterday afternoon, we heard from policymakers on both sides of the Atlantic, and they commented after the invasion that it was not going to derail their intended path for future interest rates. Governor Waller even went as far as suggesting that 50 basis points could be justified. Now, this is not our central scenario, but it shows just how strong a signal that central banks are giving that they will be raising rates. Central banks believe that the economies are strong enough and consumers are robust enough to warrant higher interest rates.
So, Stephen, last question I have for you. Have these events changed our investment outlook, and what are the impacts to investors moving forward?
Looking back at history, financial markets are relatively efficient at pricing in geopolitical events. The most obvious historical comparison would be the Iraqi invasion of Kuwait back in 1990. The stock market, the S&P 500, fell 1.1% on the day of the event because the outcome had already been discounted by markets. In total, the markets fell by just under 17% over the course of 10 weeks and then took around 6 months to recover. So, whilst markets are undoubtedly affected by geopolitical events, they tend to move past them fairly quickly. And more importantly, they don't go on to derail the broader market regime or economic growth. If we take a look at this through our investment lens, we can see that the cycle is currently supportive of equities. Valuations are looking cheaper than they were at the beginning of the year, but not cheap by historic standards. And sentiment, the emotional pulse of the market, is, while it's not getting quite close to being at a level of capitulation, it's getting incredibly close. And history shows us when markets reach this level, it's actually an incredibly powerful buying signal.
Well, that's all we have time for today. Thank you, Stephen, for your insights. And to all of our listeners, thanks for watching and enjoy the weekend.
Hi, I'm Eric Risteman, Chief Investment Strategist for Russell Investments. If you like what you saw in this video and want to see more like it, please subscribe to our YouTube channel.